Who is a more fitting rival for Intel than AMD? From leading the charge in technological advancements to closing a $50 billion deal for Xilinx, AMD's valuation soared so much it even passed its Titanic competition, if only for a moment. But is this hype justified? Today I want to take a deeper dive into this chip-making giant to find out. Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. AMD's story is a lot like Intel's. After leaving Fairchild Semiconductor in 1969, Walter Sanders founded AMD to produce semiconductors. When it became Intel's secondary source as a chip provider, AMD finally found its footing. However, the company had bigger plans, and that was to create its own chipsets. This move sparked a legal battle with Intel that lasted for a long time, but eventually AMD came out on top. After that, the company started making acquisitions and attempted to expand into new markets. In 1996, AMD acquired NextGen to accelerate its move away from competitors. 10 years later, it acquired ATI Technologies, opening access to the growing graphics card industry. But acquiring ATI was a double-edged sword and the start of a decade-long slide down for AMD. Plagued by mismanagement and terrible financial guidance, AMD would post huge earnings misses over the next year. The company looked doomed as these issues continued to compound, until E3 2016. That year, AMD announced its brand new Zen architecture. This kicked off a renaissance era for the chipmaker. With this, AMD was catapulted back into the spotlight, which allowed it to not only grow revenue but also reclaim lost market share. And that leads us to today. Since then, AMD's been on a roll, but I'm curious if that's led to a better balance sheet overall. So let's take a look. The first thing we're looking at is revenue growth, and it's a bit odd. From 2017 to 2019, revenue only grew by $1 billion, then went parabolic in 2020 and 2021. Assigning a grade, I think it deserves an A+ for growth, but an F for consistency, so we'll settle on a C+. It's the same story for free cash flow, from a deeply negative number to parabolic in just 2 years. I'm giving AMD a C for much the same reasons. And shares outstanding are especially bad, going up 30% over the last 5 years. Since AMD's current CEO has been leading the company since 2014, it's definitely been a conscious decision to dilute shareholders. 30% isn't nearly as bad as some of the other high-flying tech companies, but I'm still giving AMD a D+ in this field. Moving on, we'll look at AMD's debt levels using the last 3 years of EBITDA versus its net debt. And finally, something reassuring, AMD boasts a negative net debt, meaning the company owns far more current assets than total liabilities. That's great to see. Essentially, it has nearly enough cash to pay off all of its outstanding debts. Because of this, AMD finally gets an A+. Unfortunately, we're going right back to a D for the free cash flow valuation metric, considering this has been a less than stable area for the company these past 2 years. Then, on the flip side of that, its return on invested capital looks pretty good for this past year. Same for the last 5 years as well. AMD's ROIC is well above our 9 and 10% goals, so for that, an A-. Since AMD does not pay a dividend, our final grade for AMD's financials falls at an average of a B-. Lots of good things are going on with AMD's balance sheet, but there are also a lot of concerning things. Less than consistent revenue and cash flows against a great debt situation. It's definitely a middle-of-the-road balance sheet, thus a middle-of-the-road grade. With that grasp on AMD's financials, let's focus a little bit more on this Cinderella story. Over the last few years, AMD's largest competitor, Intel, has seemingly become complacent with its technology. There's a myriad of reasons why, but perhaps the largest was that it had no real competitor to challenge its empire. Intel was number one and they knew it, and this complacency allowed AMD to quietly develop a new product line to strengthen its place in the market. It came roaring back from the brink of bankruptcy with growing revenues, new partnerships with TSMC, and eventually acquiring big companies like Xilinx. The company even surpassed Intel in value. In other words, AMD has reclaimed its spot at the top of the mountain. And so the question I ask is, where do we go from here? It's great to look to the future, but I think there's some insight to be gotten from the past as well. Because this isn't the first time AMD has come back twice as strong from the brink of doom. This has happened before, and we saw it happen in 2007. In 2005 and 2006, AMD debuted a new line of processors. The Athlon processors were faster and more efficient than Intel's. Thus, AMD rapidly gained market share in every area from phones to even the larger markets like notebooks. It allowed the company to make titanic deals with the large PC manufacturers of the day, Lenovo and Dell. AMD peaked, controlling about 26 96% of the processor market. However, cracks started to form. Since AMD was still considerably smaller, it lacked strong pricing power. Intel made formidable investments with this new competition. Thus, AMD's ships started sinking. Margins sank 28% to 58%, and it burned cash at an incredible rate. This proved to be unsustainable, and just 1 year later in 2007, AMD's market share had fallen to 23%. Intel regained chip dominance, eventually claiming more than 80% of the total chip market for the next decade and a half. All this sounds very similar, doesn't it? AMD comes out with a revolutionary new product line and begins to eclipse Intel. It snatches market share and becomes the dominant chipmaker. Intel sees the competition, so it begins to ramp up investments in both technological advancements and production capabilities. So, could this just be history repeating itself? Maybe not. For one, AMD is much larger and much more established than it was in 2007. It doesn't need to burn insane amounts of cash to pass Intel. Now, it's a free cash flow positive company with hordes of cash. If anything, should AMD's growth slow down, the company can better absorb the blow now. One of the other big differences is that there are more markets to compete in today. Back in 2006, there was no real reason to fight for the server chip market since the demand for those products wasn't very big yet. Even the PC and mobile markets were considerably smaller than they are now. Flip back to today, and the predominant market is for these server chips. Along with the gaming console market, mobile market, and the growing EV market, demand for these chips has never been higher. Slowly, AMD claims more and more of that market share. Not only does it practically have complete control of the major hardware and game consoles, but it's also been increasing its share in the server market. On top of that, the company manages to keep up with the growing PC market on top of it all. It seems like AMD has an infinite runway, and if you want to help this channel claim more market share, be sure to subscribe to keep up with the best investing content on YouTube. Still, there's a bit of a road bump there. A big concern that recently came up was the growth of these industries has started to slow down. Given the large uptrend of all of these industries in the last 2 years, it's reasonable to assume that the growth would start slowing down as demand does. To address this potential problem, AMD made the $50 billion acquisition finalized in early 2022. It bought Xilinx, a powerhouse chipmaker. As an innovator in both hardware and the software spaces, and an industry leader in programmable logic devices, Xilinx stands head and shoulders above the rest in its field. This acquisition should help offset some of the growth challenges AMD could face in the coming years. Still, there are some challenges that AMD faces, and they're quite big. Their biggest rival, Intel, announced a plan to not only reshore chip manufacturing, but also invest $100 billion over the next 10 years to reclaim its dominance in the market. And now, with Pat Gelsinger at the helm, Intel has already started this ambitious plan to bring the company back to the forefront. It's returning to innovation and revamping chip manufacturing. So, how will AMD handle that? And that seems to be the million-dollar question. It makes me wonder if AMD can continue to gain market share at this incredible scale. Now that the market's growth is fading and the chip shortage that has plagued the world over the last 2 years could be coming to an end, it'll be interesting to see how AMD plans to overcome these obstacles on top of Intel's push to redominate. Because all through history, Intel has historically had better margins and way more cash to reinvest into the business. Intel could just as quickly take back that market share that AMD has swept away. Again, we really need to put an emphasis on the chip-involved markets starting to slow down. There's really only two big growth markets left if you think about it: server and mobile chips. As for the mobile chip market, big competition takes up the space, such as Qualcomm, Apple, and MediaTek. That means that the server chip market is truly the last large bastion of growth for AMD, and it's going to be incredibly hard for the company to compete with Intel shoving its way into this market, as it's just as big. Plus, on top of all of this, AMD has exposed itself to increased geopolitical risk by subcontracting out much of its chip manufacturing to other companies like Taiwan Semiconductor. These companies have benefited from this partnership, sure, but given the recent events that have transpired, I don't think Taiwan is the best country to be wholly dependent on for your chips. And it seems that Intel's decision to reshore production of its chips could turn out to be a very good idea. Overall, I do think that AMD will continue to do well in the short term. However, I find it likely that over a longer period of time, Intel might be the better buy. It has the sheer size, renewed will, and the cash to be the better option. I don't doubt that AMD's had a great comeback attracting investors, yet these same investors demand that the company continue the beat earnings and raise guidance cycle, resulting in this quarter-to-quarter survival for AMD. What happens if the next quarter doesn't do so well? We could see a repeat of 2007, or a drawdown similar to Facebook and PayPal. And so that leaves us with the question question, am I going to be buying AMD? And the answer is no. I think the risks far outweigh the potential upsides of AMD. At the extreme overvaluation and unstable earnings, I think AMD investors are in for a rocky couple of years. And that's all I've got for you in this video. Leave your thoughts on AMD's future in the comments below, and check out my video on Intel on screen right about now for more information on that company. With that said, I'll leave you here, and I'll see all of you in the next episode of Dollars and Cents.